The world of investing is something that is far more complex than we have ever imagined, and getting into it is a challenging path to take. But along with guidance and necessary information about it, it makes it a lot easier. Therefore, in this video, we will talk about some investing advices for normal people like you to better utilize your time and money. But before anything else, welcome to the Pocket Investing channel, where the world of finance and investing is made the easiest. Number 1. Begin as soon as you can. Since you are often not making a lot of money in your late teens, saving is difficult. But with investing, it will all soon be well worth the effort. As when you grow older, and if you make investments $500 monthly for a yearly profit of 8% at the age of 30, you can acquire almost $745,000. And even though you didn't begin going right away, you are not yet behind. However, it is important to remember that the greater money you'll have to put in, the further you stay. Number 2. Discover investing options by exploring the surroundings. It's possible that you'll realize in the future that you desire to discover more concerning the financial markets. Begin by joining a few businesses that provide the goods and skills you value. Study deeper into the businesses to discover further on their benefits over rivals, and whatever experts have to assume regarding it, or just how they generate revenue. Don't put a sizable portion of your wealth into a business you would like to engage in at the same time. When you are unable to purchase a complete stock, you may engage in modest portions since most estate agents permits you for this. You should not be scared, as nobody anticipates you to develop into a trading professional immediately. Number 3. Establish a spending limit for your investments. One must choose an investment budget prior to deciding what to engage in. The best initial step is usually to benefit from the extra cash offered by your employer's $401,000 bonus. However, you should also work to accumulate a 6-month cash savings that you can maintain in a savings account or mortgage. This reduces your risk of financial loss, since in the event of an unforeseen emergency, you wouldn't be required to trade assets at a loss. If you're prepared for a crisis, strive to put aside 15% of each salary for investments. Whether you're starting late, you might have to set a larger goal. Number 4. Observe the bigger picture. Although quick investments may be a hot topic, the truth about investment is that it is not always about getting profits today or a year from now. Make investments if you're prepared to watch them rise for at least 5 years. And always keep in mind that your personal investment shouldn't be placed in the financial industry unless you require it quickly. Before we continue, don't forget to subscribe and like this video to not miss out on upcoming videos. Number 5. Take a chance. Purchasing stocks is the best method to accomplish the expansion that will create a savings account. Regardless of the fact that you do not even bother about the financial markets or monitoring it makes you worried. Connections are better than shares, but relatively safe investments have limited profits, particularly considering the extremely poor return rates we currently have. When selecting how to divide your wealth, there seem to be various guidelines that you can use. One well-liked approach is the approach of 110. It claims that you should deduct your age from 110 to determine how percent of your investment should consist of stocks. This means that whether you're 35 years old, you should strive to spend 75% in stocks and 25% in debt securities. Number 6. If you're willing to investigate, stay away from single companies. In comparison to those nifty investments, Individual equities may assist you in achieving even higher rewards. However, don't choose a share until you're prepared to do your investigation on them, as eventually, you're going to overcharge if you engage in the newest trendy investment in an effort to maximize your profits. Regardless of your skill set, trading in OTC stock is a horrible idea. These stocks are typically inexpensive since the business that offers them is having financial difficulties or hasn't been successful, and you run a very significant possibility of missing your whole net worth. Number 7. Do not even pursue the financial markets. Following a fall, it's not a wise move to begin constantly tracking the financial markets, except if you have a lengthy outlook and view it as an advantage. Consider studying on the details regarding falls rather than concentrating on what recently occurred. Just by then, you'll discover that the financial market falls are extremely frequent and that they typically end successfully. Number 8. Maintain a minimal interest rate. With this tip, it involves for you to examine the cost proportion for the products you select to determine whether you are paying excessive cost. If it's below 0.1% is preferable. With a cost ratio of 0.1%, only $1 out of every $1,000 invested is used for trading charges. However, you might be capable of reducing your prices even more. And that ends today's video. We hope you learned something today that you can apply wherever you may be. And as always, see you on our next content.